Good evening. This is the Elliott Wave update for the NASDAQ 100 for Tuesday, March 15th, 2022. An extremely bizarre day in the markets as all of the equity markets just jammed higher. And I mean jammed higher, with the Dow finishing up 600, the S&P up 8850, the NASDAQ cash up 411, the future up 407 as we go into the close of that extra hour in the afternoon. The Russell up 26. This was a very bizarre day. I mean, what it came off of was a new low for the whole sequence down below 13,000. It had reached 13,942. And then rallied immediately. Now, as I said, this started at 2 o'clock in the morning Pacific Daylight Time. So 5 o'clock New Eastern Daylight Time. And then by the time that people were getting to their offices, they were buying. They were buying, and it just kept on going without stopping. Now, there was a lot going on that would have said, what are you guys doing? And what is behind this mass pile-in of money coming into the market as buyers? And so I went back over, and as I mentioned in yesterday's update, the VXX is being discontinued by Barclays. Now let's just hopefully they'll pick it up for me. There we go. Now, again, they dropped this volatility. This volatility was 335% during the day. And now they got it closed again. Look at the high. Now they got it back below 30. And today, all day long, it was trading at 35 to 38 and then dropping it down on this close is massively impressive. In fact, getting it down 11 cents when at some point today it was up $9 or $10. And these volumes with this volatility, you can go all the way out to the March, and these expire on Friday, by the way. The March 70 calls offered at 28 cents and traded 19,632 contracts. Now, from what I understand, these are closing contracts. You're not allowed to institute a new position, so you have to take your positions off. So through conversation, I began to realize or felt that this is seeing the most massive short squeeze ever in its existence when you consider that the VXX is purposely constructed, whether they did it right or wrong, it's constructed to go to zero. Volatility goes to zero. This is a very short-term volatility index. And it usually goes week by week, and they just, volatility might pop on Monday, Tuesday, Wednesday, Thursday, but on Friday, they knock it back down because they're taking it off for the weekend. And come Monday, they're going to knock it, because volatility goes to zero by Friday. So this is an interesting situation. There was massive covering here, massive covering in short positions. And I believe that rallied over into equities. There was just, that's what it felt like, just massive short covering in all of the indexes and their components. That, basically Apple was being quoted lower. All of the stocks are being quoted lower. Amazon ended down 100 yesterday. Today, it takes that 100 right back, and they just run it to the moon. All of the stocks started pretty much, Google was down, Facebook was down. It didn't last all of about a second. And they came in and it was just take it to the moon. Now, what could this actually suggest for us in terms of an Elliott count, in terms of what we're confronting, which a major piece of it will be revealed tomorrow. Today started the Fed meeting. Tomorrow we get the results of that Fed meeting. And so another thing floating around today was the fact that crude oil was down again, another $7, $8, $9, working its way back to being only down 8 right now. That, you know, that this, you know, inflation's all going to go away. And it's like, oh my God. The short-term nature of market thinking is pretty bizarre. But in any case, that got floated in. And it just on and on and on. And in the meantime, they just started to break above all of the resistance. So I had originally had subminute 1, subminute 2, was looking for it to get down below this level, which it barely did, to finish minute 3 and then give us a small 4. And then the 5 would be the larger wave, which would take us down further. That did not come into play. Now, but the upside, I'm just moved that all that wave 1 down to here. As I've been moving the 1s down, it's like that is working better because it fits the wave pattern that I'm looking for, and we're not getting them, and we're getting short little moves. And so I just have to move it down and call this one. This is wave 2 thus far. Now, again, what wave 2 cannot do is it cannot go and break above 13,866. A break there, wave 2 would no longer be correcting wave 1. It would be a new advance. Now, I'm going to take this up 1 so that we can see what that alternate view was, which I alluded to yesterday. And let's just take a look if we can get this up. Here we have 1, 2, 1, 2. And supposedly 1, 2, and then again another 1, 2. So in essence, what we got going on, if it pans out, is 1, 2, 3, 4 subdivisions of this third wave, the intermediate third wave. This has 4 subdivisions, 3 basically, if we just go from inside here. So there's 1, there's 2, and there's the third. But we're going to need now, so we're still looking for the bulk of a third wave to unfold. And right now, while we have to leave upside room, if this breaks above that level, what it then leaves is an A, B, and the B was a little bit irregular because it came down below the starting point of the wave A. And then we've got a C wave up to complete and form minor wave 2. That's all I got. That's all I got. And here's what it would be against this one. So again, as a minor wave, it can't get above 15,245. And that might be the ticket. I can't tell you, what if the Fed comes out and says, we're only going to raise it 50%, 50 basis points, and they fall in love with that. Algorithms are quirky. Algorithms just come out and they just do. And you start pushing those buttons and bam, we're off to the races. Now, so I have to make both sides of this coin available so that we're not going to be, yes, today was a surprise, but I have to tell you, when it started breaking and I moved the 1 down, I then became in tune with, okay, you're going to go up. I need to trade you from the long side. And that's where you're going to make your money. And so it was still a profitable trading day, even though I was looking for a smaller rally and the market to kick over and really start to fall off the cliff. That didn't happen, but it should not. My point here is that when the market is doing what the market does, it shouldn't knock us out of whack so that we're no longer able to trade. If we're constantly trading with what is in front of us, and we can visually see they're taking the market up, and you can see it happening, and your short time frames are telling you we're breaking above the moving averages. When this thing broke above the 50, it's like, get out of the way, it's going up. And it already, from 12,942, it broke that at 13,200. So it had already rallied over 200 points and just kept on going. And so each time it would break a level and above the moving average, it accelerated. Then it broke and then it accelerated. Then it came back and then it accelerated. Broke another resistance point and it accelerated, heading for the 200. It just ran out of time. But I'm getting more convinced that they're likely going to try for that. And then we have this, and then we have this. So continued upside, we have the hourly 200 at 13,507. And that would be, yep, we're going to buy it up to that point. Why? Just because that's the next value area. Because that'll present resistance. 13,512 is resistance. 13,593 is resistance. If it breaks that, we only have 13,865 left. So here's the gig. I still believe that this was an anomaly in today's trade, and had to play it, and that was fine. I did well. And so, but how do I want to be prepared for tomorrow? I have my thoughts. If this is complete and I can get an ABC, but it's not even looking like I'm going to be able to get an ABC. If that was A and this was B, this could be C, which would suggest we still have more to go. So we shall see. But there's the resistance, 13,507 to 13,512, and then 13,593 to 13,600. And if it starts pushing above that, we still have room to call it a wave 2. I don't like seeing them quite that big, but for whatever the reason, the market is very afraid of missing out on the upside. And they're panicking to cover shorts. And we ran through a lot of strike prices. So option traders were going nuts. There's a lot going on today, and it just added fuel to this fire. But for tomorrow, I would expect continued upside, unless something comes out that switches the mood to who gives a crap about covering your shorts. We're putting shorts back on. We are going to be selling. We're going to sell the long positions, whatever's going to happen. And trust me, I think there's enough out there. We now have EU member states sending and have sent people to the Ukraine to show support for the Ukraine and to start discussions. We have the President of the United States traveling to Brussels to show support via NATO to what's happening in the Ukraine. This is a setup. This is a setup for a disaster. I am just waiting. So that's sitting by itself. Tomorrow, Fed Day, we will know at 2 o'clock Eastern what is or not going to be happening. Expect a massive reaction either way. If it's not enough, they're going to buy it. If it's too much than they thought, they're going to smack it. Just be prepared. Now, initially, we got to allow for this a little bit extra run up. That number comes out, whatever that interest rate change is going to be, it could force this thing straight up and through this. Then we are in that other, still in the minor 2 down here, the minor 2, and that would project to be a C wave. The C wave, I'd be looking for it to take out 14,391 on its way up, closer to 15,000. We'll see again. If it happens, we can run fibs and measure them out. Right now, it's in the back of the mind. And if it happens, I'll know what I need to do. But I'm now looking for just a little bit more and for the market to turn. And if it does, within this count, as I continue to say, it should slide massively, quickly lower. That's going to be the signal. It's like it's in force. It's back in force. You will not be able to get an order unless you're doing it at the market. That's how fast I think it goes. Just absolutely boom. Very, very quickly. So that's 11 Pacific, 1 o'clock Central, 2 o'clock Eastern. And then at 2:30, we get William Powell's press conference. He's going to tell us all about how this decision was made. If they leave him alone again, I will be stunned. In fact, I would find that the market's reaction should not be positive. It should be extremely negative because inflation is rampant right now. So I am expecting something. We just got to wait and see how much. And there's going to be a lot of talk either way. So I'm going to leave it right there. Play nicely, but also trade according to what the moving averages. They switched very quickly from all being down to now all facing up. But we still got the 200. That's the hourly 200 here in the NASDAQ. That starts to break. These guys will be moving right behind it. And if that rally really picks up steam, they will cross above the 200 and everything will be in alignment. From the hourly on down will be in alignment to take off and keep going. I'm sorry to say, but that would be the scenario. But again, we're giving a technical picture here. I cannot connect fundamentals. We know we've got them out there. We're waiting to get the report so that we know technically what's going to happen. Now, that would be our upside. Downside, if it gets up a little bit, pauses, stops, starts to turn, it should turn with a vengeance. So again, it's going to be news generated, whether that news comes overnight or whether that news comes tomorrow afternoon, it will be news generated. All right, I'm going to leave it there. Trade smart, trade using every tool in your toolbox to keep you in line, to keep your mindset and your focus on the markets. Next update, Wednesday, March 16th.